All right, to say my next guest is rocking would be a major, major understatement, right? You saw this DRAM ETF. We've talked about it on this show, shattering the records, right? The quickest is 6.5 billion in assets, not even close. Second big next was 43 days, 36, just mind-boggling. Let's bring in Roundhill Investments, their CEO, Dave Mazza. First of all, congratulations, my man.
Thank you.
You are absolutely killing it. Now, here's the thing. These memory stocks today taking a little bit of a breather, but they normally have one-day breathers, right? And the thing is, one of the value propositions or one of the big selling points has been how inexpensive they are. They're, the lowest PE ratios. I think Samsung has the second lowest of any stock in Asia. But now all of a sudden we're hearing in the last week or so, people are saying, well, they have low PE ratios because they're cyclical businesses. And when they dry up, they dry up completely. What are you saying now that there are certain folks coming out trying to push back against this?
Well, yeah, you can see the valuation gap here, which is extreme relative to the broader semiconductor index or even technology. This re-rating trade, in our opinion, has long-term legs to it. And the reason being is that, yes, they were cyclical companies. They were incredibly driven by consumer demands, boom and bust cycles, but that's all changed, and it's changed because of the AI data center build-out. Just a few years ago, Micron had 15% of its revenue coming from data centers. Now it's 65,
right.
And that's persistent long-term demand, changing the nature of their business and their earnings expectations.
Another knock on this whole thing is that they say it's like a mania. Right, the top two names in this space are from Korea. Right now, you got 52 million people in Korea, but there's 100 million accounts. So this is sort of a trading frenzy, the kind of thing you see at market tops.
Yeah, look, the moves have been pretty extreme. Since we launched DRAM, it's up 96% in a little over a month. So that is a big move, and I wouldn't push back on that fact. But that doesn't necessarily mean the theme is over.
Right.
Launching an ETF doesn't mean a theme is over. In fact, I think we've unlocked demand for these two securities, Samsung, SK Hynix, which were very difficult for US investors to access.
All right, let's talk about what's in your batter's box. You got a new one today. Loha.
Yeah, Loha. This is a fun one. It's actually almost the anti-AI ETF. This is focused on companies that are AI immune. They've been around for hundreds of years. They're not going to be disrupted by a large language model or a new agentic AI solution. Again, it's really focused on companies that have long-term durability. What's interesting is even if investors haven't been long AI stocks, 45% of the S&P 500 is AI or AI adjacent.
Right.
So for someone looking to diversify away, thinking that the trade is over, we don't agree. But if they do, this ETF can be a great solution.
Last year, Caterpillar became an AI trade, and it hasn't stopped going up. This week, Ford became an AI trade. To your point, it's revitalized a lot of names, and of course, speculation about 2 times DRAM. I want to talk about areas where there's some really amazing action. You like Nebius here, right? We talked about it a lot. We talked about it this week. In the neo cloud space, you still think has a lot of upside.
Yeah, we've owned this name in our generative AI ETF since the end of 2024. It really kind of...
Why'd you buy it so early? What did you see then?
What we saw then was really the idea that while there's a ton of interest in cloud computing, the neo clouds, which Nebius is purpose-built for AI. And this most recent earnings that they put out yesterday, I think is a great proof point for that. Revenue up over 600%. They're doing things that other providers cannot provide, other than maybe a CoreWeave. Difference compared to CoreWeave, not nearly as much debt financing on the balance sheet.
All right. Iran is making a pretty good move, too. Let's talk about power for a moment. There's a lot of ways of playing this. Cummins Engine has been a long favorite of mine, and this is one that you like here as well.
Yeah, so this is an interesting stock because on one hand, it's a halo stock. AI immune, right? They make power. But if you actually look at their most recent earnings report, their power generation segment had numbers that were through the roof because these data centers, you know what they're buying to back up all the power that they need? Cummins equipment.
Right. And copper has been hot. It keeps making new highs, and obviously there's the new data center correlation to copper mines, and it seems like they won't be able to keep up.
Yeah, exactly. So copper and Southern Copper in particular is a name that I think investors should look at for, again, if we're looking to take the AI trade as it broadens, doesn't necessarily mean you need to sell it, can look for other areas. Copper is a situation where, unlike oil where you can find new deposits all the time, in the case of copper, most of the largest have been found. And with the growth of AI data centers, there's an increased demand for copper, and we're beginning to see it in the share prices.
Is there some of these copper names are based in foreign countries, and it feels like sometimes there's a hiccup there. Are you concerned about any of that kind of stuff?
Look, there's always geopolitical risk when
Right.
it comes to the mining companies. I think
Right.
Southern Copper has been through thick and thin when it comes to all of that, and has proven to be a resilient name.
All right. Also writing your note, and I thought it was intriguing, you saying that we're set up, sound like you're saying we're sort of set up perfectly for a post-midterm setup, for a nice rally here. And just to remind folks, typically we go down into these midterms, but also typically we come out of them pretty strongly. Some people have been advising their clients to get out of the market and wait for this to happen. I think that's a mistake. How are you playing it?
Well, look, I think we saw the sell-off, right? It hit almost 10%, a little bit shallow. I think if you look at historical data, we tend to see it significantly worse, but we're already seeing the market start to rally. And then heading into midterms, again, if we look at the resiliency of corporate earnings and just the numbers that are being put up, there's certainly a ton of risks out there from a macro standpoint. But at the end of the day, corporations are driving earnings, and that's driving the market higher.
What's your biggest concern right now?
I think my biggest concern is still there is unresolved issues, right? We know there's Russia, Ukraine, situation in Iran, but it seems like we'll find out what happened in the China meeting that we had today.
Right.
But I do think there's progress on those fronts. But you can't ignore that there are risks out there.
Big picture, though, this is something we're talking, for the next several years being built into these stocks. And as a long-term investor, you don't want to necessarily ignore those things, but the right thing to do has been to focus on where the opportunities are.
Well, exactly. If you just focus on reading the paper or watching the naysayers, you should have been out of the market months ago,
Right.
but you would have missed out on great opportunities. There's always going to be volatility and dips, but they've proven to be opportunities to step in again, because for the time being, we're seeing excellent revenue and earnings growth coming out of stocks.
I got to shake your hand, my man. You're killing it. You're killing it.
Thank you, Charles.
They're killing it. Good stuff, man. Congratulations.